Hello, I'm Rosemary Armao, and this is my podcast, Beyond the Brink and Fighting Back. So today I went to the supermarket, and then after that I went to the gas station. I filled up my car, and it was painful. This is like a double whammy, and I'm especially eager because of that for our topic tonight, which is money. And with me to talk about this is an old friend and colleague from the roundtable, Mark Wittman. He's an investment banker and just kind of a all-round great explainer of things arcane and economic. We last had you on, I think it was in January, Mark. I love having you on. I love your explanations and your sometimes weird take on things. And I want to start, if we could tonight, he's laughing. I want to start, if we could, in this episode with the turmoil now going on at the Federal Reserve. And to preface that, can you please talk to us mere mortals about what the heck the Federal Reserve is, what it's supposed to do, and why you think it's important that it be independent from what's happening in the Oval Office?
Happy to do all that, Rosemary, but let me start by defending myself, saying my views are sometimes unconventional, but I wouldn't say weird. But in any event, it is a pleasure to join you always.
Always. I love talking with you.
Well, let's talk about the Fed. The Fed is not just a national interest rate machine. It also is effectively a bank. More broadly, it's the ultimate cop for depository institutions in the United States. It is a financial fire department and a payment system plumber. It is also, by the way, one of the country's most prolific publishers of economic data and analysis. The part that gets everybody shouting is monetary policy, which is classically cast as a trade-off between controlling inflation without crushing jobs. And that answer spilled right into why there is such a dust-up around the Fed currently, and Kevin Warsh's appointment as the new chairman of the Federal Reserve. So let's talk about the dust-up. Donald Trump and the administration have taken an incredibly aggressive stance towards trying to get the Fed to take an accommodating interest rate policy in the United States, in part to nominally make life easier for folks in America by bringing down interest rates. Now, there are a number of fallacies in that theory, and I think we've talked about this before.
We have.
The Fed controls only one short-term interest rate between it and banks. Normally, you see, and so it sort of is like a individual pulling on a tree branch right at the part of the branch where it connects with the tree. It can have very little effect. And the wind, if you will, economic conditions broadly, can oftentimes swamp that effect. Normally, though, what happens is the Fed's moves are confirmatory of what the market is seeing anyway. So you'll see the branch sort of move in unison with the Fed and the way the Fed is pushing the branch. But that's less about control and more about, as I say, confirmatory moves on the part of the Fed. But what the president wants the Fed to do is to accommodate his political agenda, particularly in the short run, by making things a little bit easier and cutting interest rates for him and relieving pressure on American consumers. The risk with that, and we've seen it in countries like Turkey, is that the Fed does too much of that nonsense. It serves to chasing short-run results will oftentimes lead to a long-term degradation in the financial health of the country, and particularly for the U.S., with the credibility of our currency being so pivotal to us in terms of providing value, that could be very detrimental. And for the most parts, it seems like the courts have and will continue to beat back the president's attempts to get his clutches around the Federal Reserve through his sort of trumped up lawsuit against Chairman Powell, and through his attempt to try to jeopardize Lisa Cook's position on the Fed because of possible what I'll call foot faults on her mortgage applications.
Yeah, that's currently before the Supreme Court right now. Oh,
Right.
okay. Okay. You've talked about the risk, and we've read about that, and we understand that the courts, at least up to now, have held Trump back. But is there anything at all to his idea that the Fed could be helping the economy by dropping the interest rates? Is his argument completely stupid?
Believe it or not, Rosemary, it could turn out to be prophetic in a very peculiar way. And let me explain why. What we are seeing now is we are in the foothills of potentially a pretty significant supply shock in oil prices, which will ripple through as inflation. We
Mm-hmm.
saw one of these, particularly in the late 70s. And in response to it, Paul Volcker, in order to fight inflation, cranked up rates even higher than he might have otherwise because of other conditions that were present in the economy. The general consensus is when you have a supply shock caused by an oil shortage, since you can't solve it with interest rates, you're better off not tightening. And there's an argument that if the economy, like an airplane in flight, were to start to stall out, you could see a situation where even though you had inflation running much hotter than you wanted, you still might cut rates to accommodate economic growth. Now, let me explain something, Rosemary. I and others, this is where I am unconventional, if you will, believe in a
Weird,
monetary,
as I would say.
yeah, believe in a monetary explanation for inflation, and that is that inflation most often is caused by just simply too much money in the system. That's
Right.
what the main sin, in my estimation, was during the COVID period. And by the way, my argument for that, as opposed to some sort of supply shock, was everything connected with COVID went back to normal. But when prices didn't go down, they stayed elevated. Why?
Correct.
Because the economy equilibrated to the new supply of money that's out there. It hadn't been yet soaked up by either inflation or growth, and still we were still running hot on inflation. To me, interest rates have only an ancillary effect on inflation. They're not the main driver. They do determine something called the velocity of money, basically determining whether or not people sit on hoards of cash or not. As interest rates go up, that becomes harder to do. And so money tends to flow around in the system more readily. So, should the Fed be lowering rates? No, it shouldn't. Is it possible you could get to a situation where, even in the face of a supply shock where inflation is up, that the economy stalls and the Fed might want to put forth sort of a symbolic rate cut? Maybe. Rosemary, at the margin, whether or not the Fed rate goes down 25 basis points at a
Mm-hmm.
particular meeting or even 50 is really window dressing, particularly
Right.
if you think about the analogy of pulling on that branch. The market's going to correct for it. Now, if you do dramatically stupid things, that can cost you over time. But so the answer is Donald Trump isn't technically right that the Fed should be lowering rates, and he is certainly politically and technically very in the wrong, suggesting that the White House should have any control over the Fed. And I think that brings us to his appointment of Kevin Warsh
Yep.
and the subsequent decision of Jay Powell to decide that he's going to stay on the board of governors even once he is no longer chairman.
Yeah, I want you to stop here a minute because there's a lot, and I want to roll this out. Talk about Trump going after Powell, which resulted in this decision that he has now made that he is going to stay on after his term ends. Traditionally, when the Fed chair's term is up, he gets off the board. He's going to stay on, setting up potentially a dissenting vote against Kevin Warsh. I guess
Warsh.
it's yes, hard name for me to pronounce. I guess, but he appears to be a shoo-in for that job, and at least the conventional thinking is that he will go along with Trump's demands to loosen the economy, to drop interest rates. So, can you talk about why Trump attacked Powell and how that may have backfired? And if you think Warsh will be a good Fed chair, there's a lot of thinking that he might be exactly what we're needing.
Let me take those, if I may, in reverse. Let me talk
Okay.
about Warsh first and why. And what the reason I want to do it in reverse is because I actually think that Powell is doing Warsh a favor by staying on, and I can explain that best by talking about Kevin Warsh. So the real question is, which Kevin Warsh is going to show up on his first day on the job as the
Good
Federal
point.
Reserveman?
Good point.
Historically, he was what we call a hawk, somebody who was very focused on the part of the Fed mandate that says we need to keep interest rates, that we need to keep inflation under control.
Right.
I am theoretically aligned with him. He is very much a monetarist. He worries about the supply of money. Another way of saying that in practical terms is he has expressed the belief that the Fed needs to shrink its balance sheet. And when that is the simple version of that is he thinks there's too much money in the economy and the Fed needs to reduce the money supply. And another way of saying that is to shrink its balance sheet. So the other thing is he's not an economist by training, which I like. He's been very critical of the Fed, which I like as an institution. He thinks the Fed needs to be far more transparent in what it promises the market, which I think is, I and others think is a very intelligent adjustment. Basically, when the Fed says to the market, here's what we're going to do and we promise this will happen, everybody stands closer to the edge of the risk cliff because the Fed has basically said, we're going to take care of the wins and you'll know, we'll make sure that they're not so strong, they'll blow you over. So in a way, the Fed is allowing everybody to take on more systemic risks in other parts of their portfolio, if you will. If the Fed stops making promises, people have to back up from that cliff and take risk out in other places within the system. And we think that's a better approach. And it's more in line with what the Fed has done historically. There are other technical ways in which Warsh is more aligned with a monetarist or my view of things. Now, the problem is when I say which Kevin Warsh shows up, I like that Kevin Warsh and hope he shows up. The problem is during his confirmation process, he had to repeat the Orwellian 2 + 2 = 5. He had to basically not confirm that Joe Biden had won the presidential election, which to me makes anyone ineligible to participate in our democratic government. But the question is he and he's also had to change the costume that he wears from one of a hawk, somebody who's really focused on keeping inflation down by conventional means of keeping interest rates higher. In order to pander to Trump, he said, I am for decreases in interest rates under the certain set of circumstances. So I believe that the optimistic view is Kevin Warsh is a hostage. We should have read him blinking into the camera as he said what he needed to get the chairmanship job. And I hope that that's the one that shows up. And if it is the one that shows up, having Jay Powell stay on the board of governors will be helpful because Jay Powell and others will dissent against what Warsh can say he wants nominally. Warsh can lose those battles and point to Powell as a lightning rod for criticism. So in a peculiar way, and to be clear, I should mention that the position on the board of governors that is no longer available because Jerome Powell is staying on was one that was occupied by a Trump to begin with, right?
Correct.
So in a way, if the Kevin Warsh I want to show up has been there all along, and Jay Powell, they probably never had a conversation about it. These folks at that level don't have conversations that they might be asked about someday. But if they winked at each other enough, he's probably doing Warsh a favor if the right Warsh shows up on the job. And I will tell you.
Okay, so go ahead. You are saying, though.
Go
ahead. I want to make sure I have this right, and others may be thinking this too. Warsh is considering the job on the Fed akin to job on the Supreme Court. You get the job, you say whatever you have to, tell whatever lies you have to Congress people, and then you get the job, and then after that you can make decisions that no one can assail you for because you're in that job. But didn't the political attack on Powell make that debatable? Trump will go after him if he votes other than the way the second Warsh has said he will vote?
Well, first of all, again, I go back to if you're a true dyed-in-the-wool monetarist, as I and others are, and Warsh might still be, dropping rates 25 basis points to put a little chum in the water isn't all that significant. So you may be able to make the president happy without truly changing the mission of the Federal Reserve. And yes, I am accusing him of making a hostage video as part of his confirmation process and as part of his interview process with Donald Trump. Now, we could all be wrong. And if the Donald Trump patsy shows up to the Federal Reserve, the good news is it's a 12-person vote most times at the Federal Open Market Committee. And there's still, particularly with Powell still there, there's enough of a majority that I don't think Warsh can run the ship aground. And there's a lot of institutional entropy for how the Fed does things, which even those who are very optimistic about him being on the right side of things have tried to temper some expectations amongst the faithful that he will be able to change all that much, because history has shown us that the Fed has a lot of, wait, am I using momentum? I don't mean entropy. Sorry. I mean momentum.
Momentum.
I mean momentum. Thank you.
Right. Okay. What's the worst thing that could happen if the bad Mark Warsh shows up, if the Fed does what Trump wants, if Trump becomes in effect the head of the Fed, the way he is the head of the Kennedy Center now and the head of whatever other bureau he wants to control, the Justice Department? What's the worst thing that could happen?
Well, just to be clear, I think that's a remote possibility, because I think you have to have the wrong Warsh, and then he's got to convince a majority of the Federal Open Market Committee on a consistent basis to do what he wants. I don't think those are very likely, but let's just say there's an invasion of the body snatchers that happens.
Yeah, Lisa Cook could get kicked off by the Supreme Court. You could put in a replacement, another Trump vote. It could happen, Mark. It's not that remote.
A couple of, but even then, you probably need a couple of the current governors to hit their heads really hard and change their views on things. But let's say that happens. I mean, the risk is that the Federal Reserve doesn't. To me, I'm less worried about interest rates, and I'm more worried about the Federal Reserve not cutting its balance sheet or growing its balance sheet, so putting more money into the system like it did around COVID, and then inflation starts to run far too hot.
Right.
At the same, and you risk that happening at the same time that the economy is not growing very much. They call that inflation. Now, I will say I don't think oil prices are likely to get to a spot that's going to send us into. I think we could squelch a lot of growth and bring it down to almost nothing. I don't think you'll see a prolonged recession in the United States, because we are a well-diversified economy. We are a net oil exporter. So oil prices, there's one of the conundrums, right? Which is higher oil prices leading to inflation actually benefits the country as a whole, while it's squeezing the daylights out of most consumers who aren't in states like Alaska, where they get a windfall. Right. And this is back to the issue around, economists and I'm not one of them technically, but and their statistics are horrible diagnoses of what's going on. It's I've said this before. It's as if there's a man standing with his feet frostbitten in a block of ice and his head burning in an oven. And an economist walks in the room and says, well, on average, the guy's fine, so don't worry about it.
Right. Well, okay. We both read a ton, and I don't think, by the way, that you told me what the worst case scenario was. But anyway, moving on.
The worst case scenario is we get inflation akin to what we saw during the Biden administration, where we get to nearly double-digit inflation for a protracted period of time.
Well, that's true. But right now, we have, according to this article in the Financial Times that I know we both read in preparing for this podcast, we have the highest inflation of most developed countries. And we have prospects of it going higher because not only of the Iran war, which I think is more prolonged than you do. I think it's more likely to escalate than to de-escalate. Trump's foreign policy and diplomatic stands are just deplorable, I think. We're not ending the war. So that continues. You also have food prices going higher, partly because of higher energy prices. You have healthcare costs, which are going to really be enormously impactful on the public because of the big, beautiful bill, which only goes into effect in the future, in the near future. I don't see that the prospect for lower inflation rates are lower than the Biden administration. It's in the works. We do seem to be headed towards in a bad way.
Well, but leaving aside how long we think the Iran war is really going to last, and my shorthand is I think it's going to look like Iran will look a lot like Iraq after the first Gulf War, where it is a malevolent, motivated actor. If you remember, we used to have periodic military operations. I forget the names of them. We used to have a no-fly zone, and partially because of Iraq's militants is one of the reasons we took our Iran and they became more militarized. So bad things happened. But even at $150 a barrel and gas prices approaching $6 a gallon, it's not automatically a deep recession in the United States. Again, we are a net energy exporter. It is definitely a serious shock to growth, and US growth would stall and it would hurt, and there will be a lot of pain for individual consumers. But remember, we're talking about the economy as a whole. So it would not be even at under $50 a barrel. I don't think we're in a catastrophic economic
Oh,
situation.
this is why people hate economists, Mark, that you're talking about optimism and the economy as a whole. And I'm looking at what I paid today for food and gas. And it was a lot, much more than I paid even a month ago. And I'm not seeing relief. I also want to remind you that it was the Fed that really made a mistake on COVID. There were the same sort of supply problems that we're seeing and that we're facing more of in the future, where supply is staying steady or is even restricted and demand is increasing, at least staying the same. That's inflation right there. The Fed misread COVID and said, "Yeah, there are problems now, but they're temporary. They're gonna go away. So we're just gonna hold steady." And they did not react to those problems in a very fast manner. Powell, that's a mistake Powell made.
Well, I think you're partially right. I think Powell misread it. But what happened was the government handed out a bunch of checks to everyone. And then on the other side of the ledger, the Federal Reserve flooded the system with cash by buying up bonds and handing out dollars. So basically, whereas the government normally pays for, let's assume taxes are constant, the government normally pays for increased largesse with more borrowing that takes dollars out of the system. The Fed was basically monetizing that largesse. And
Mm-hmm.
when you put more money into the system, it is no accident that the money supply rose by about 35%, and it took prices increasing about 25%, and the economy growing another 6 or 7, and inflation was still running high because we basically hadn't absorbed all the money back into our system through inflation and through growth. So to me, that's the wash risk that you could get if everybody at the Fed if we look at a worst case scenario. And that's why I think Powell made a serious mistake. And Powell still
Mm-hmm.
claims that it was that he made the most ridiculous claim a couple of months ago, was that at the beginning of the bout of inflation in the US in the wake of COVID, no one knew it wasn't temporary. Well, there were plenty of people,
Right.
myself included, who were on
Was
record screaming from the top of our lungs that what they were doing was what we call monetizing the government largesse and creating what would inevitably be and became a bout of significant inflation.
Okay, so basically, you do not see prices going down under either one of the the washes that could appear. You don't see prices going down the next 1 to 2 years.
No, and I think any reasonable accounting of what's going on in oil tells you that the oil's future market is not a great predictor of the fact
Got it.
that oil prices are going to remain elevated for at least the next year. Now, the one thing that I would caution is people, when we talk about the price of oil, we're really talking about oil futures, which is
Mm-hmm.
basically a contract to deliver oil in the future. And that is the cost of insurance against the price of oil. That market has no obligation to correctly predict future prices. It shows you the price at which people are willing to pay for insurance. Most of the large corporates I know buy insurance on oil for 6 months out, maybe a few for
Mm-hmm.
not for nine. But what they
Mm-hmm.
basically say is, I can't protect myself forever. Buying futures that go beyond 9 months is very expensive and very speculative. Treasurers can lose their jobs if that doesn't go well. So can CFOs and CEOs. And if they ride it out, and 9 months from now, oil rates oil prices have climbed to astronomical levels and they're having to change how they compete. The measure that their boards and the shareholders use to decide if they get to keep their job is how they're doing against their peers, not
Mm-hmm.
whether or not they set up an invincible force field for forever against rising commodity prices. So it's not the futures market's obligation to predict the straits that the straits, if I may, that we may well be in if this conflict continues to persist. And there's a bit of, and this is again where I think I'm a little unconventional. There's a little bit of, even the economist said, well, the futures markets are getting it wrong. Well, but the futures markets are trading what they're supposed to trade, which is an insurance policy, and everybody who wants one can get one. So I don't know what wrong means in that context.
Right.
Now, if you
Not
want to
what
say they're
not what
not,
he wants. Yeah.
well, not no, but they're not a reflection of the elevated prices that many fear there is a great risk we will see. That is true. But
Mm-hmm.
again, that's not what future prices are out there to do as their primary purpose. So for the economists to say they're getting it wrong is to put a normative standard on a market that doesn't belong there, frankly.
You can understand, listening to you, I understand why people get frustrated with economic news. It is so filled with that's not what it means, even though it sounds like that's what it means. It's very, very confusing. And one of the
Oh,
most
I
confusing things,
agree. I agree.
one
And
of,
then the one that drives me nuts is interest rates, right?
yeah,
Everybody says, well, if interest rates go higher or lower, inflation must follow. Rosemary, there is no data in modern times to
that reflects
substantiate
this.
that assertion.
Right, right. And we see it every day where, politics is now intruded. And is that true? Let me stop myself. Haven't politics always been part of the problem with the Fed? It was always meant to be independent, but hasn't it always been subjected to pressure from the White House?
It's always been subject to pressure, but never this intensely. There's a great
Okay.
story. I don't know if it's entirely true that LBJ, who wanted to fund, basically help ease things to fund the war in Vietnam, literally, pushed Arthur Burns, the then chairman of the Fed, up against a wall as he dressed him down and asked for lower rates. Whether or not that truly happened, I don't know. James
It's
Baker obviously took his runs on behalf of Reagan at Paul Volcker, but no one has tried the subterfuge that the Trump administration has tried in terms of the bogus investigation against Warsh. I'm sorry,
right.
against
Against
Powell,
Powell. Hmm.
and this trumped up attempt to translate what might have been a foot fault in a mortgage application into a reason for termination of a Fed governor, Lisa
Right,
Cook.
right.
So we've seen echoes of this, or we've seen sort of relatively benign versions of job owning. Maybe in one case a little physical push, if you believe the stories, but we've never seen the subterfuge that Trump has tried.
Why does anybody want to be on the Federal Reserve, considering how difficult it is, the pressure, the attacks on even your integrity that Powell has endured? Is it anything at all like being a Supreme Court justice, where the prestige and the honor of that job makes it worthwhile?
I think there's an element of that. Now, I also think if you truly believe you're good at it, you are in some sense a public servant. There's a lot of good you can do if your view of the world is the right one, and you help steer the U.S. monetary policy towards a more efficient approach. Frankly, you
Okay,
can
so
make you can make a
you can
lot of
make a
people's lives
difference.
better. Yeah.
All right. So if you were appointed, if you were Kevin, and you're going to become head of the Federal Reserve, what three things would you do, or what things would you do in the first year to make lives better?
I would continue to shrink the size of the balance sheet more quickly, which is to say, I would take more money out of circulation more quickly. I would, as Kevin Marsh plans to do, make the plans that the Fed has for future directions more opaque and encourage other governors not to try and give guidance to the marketplace in an attempt to take risk out. And I would reorient the theoretical work that the Fed does to truly study some of the long held, but I believe unsubstantiated theories around how monetary policy in the United States truly works.
Well, that's fascinating. I'll vote for you. Oh no, I don't get to vote. Only Trump gets to vote for this position.
Trump in the Senate. Yeah.
Okay, this is Mark Wittman we're talking to. He's an investment banker and an excellent explainer and commenter on economic policy. I'm going to bring up some other issues now, unless, Mark, there's something else you want to talk about regarding the Fed.
No, I think we're good.
Okay, then let me move on. Robert Reich has an interesting column today, the former Secretary of Labor, and and Trump critic, let's be honest. But he is noting that for the first time ever, the U.S. national debt has crossed a once unthinkable threshold, and it exceeds America's gross domestic product. We actually owe more money than we are bringing in through our production and manufacturing and service economy. What does this mean? Does that worry you terribly, or is this just a landmark that means with kind of a symbolic meaning, but not a practical implication? What do you think?
It is a significant milestone. Many of us knew we were going to get here sooner or later. Um, I have a lot of respect for Robert Reich and his sincere beliefs. I think they're half right. I put him in the camp with AOC and Elizabeth Warren. There are some of these folks who a lot of their diagnosis around what's going wrong in the United States is partially true, and I believe they are sincere about addressing it. But I think they only get things half right. Um, it is true that we are in a structural deficit that is unsustainable in the United States. The one thing that the politicians in Washington, D.C. have decided that they agree on is spending $1.10 for every dollar you collect in tax revenues is a great thing to do. It behooves politicians in the short run, but we are inherently borrowing from future generations, and we are doing so in excess. That's why the point that our debt is now as big as our
Mm-hmm.
GDP. Basically, we're saying it's too big, which is true. And we're going to find that out at some point. Usually, what happens, and if you look at either Greece during the Euro crisis, or you
Mm-hmm.
even look in the fall of 2020 under Liz Truss's administration in the UK, what'll happen is during times of market stress, the United States will go to sell government bonds, and bondholders will start to say, nope, not at those prices. We need a lot higher prices. And it will inevitably create a feedback loop that will force the government to start to rein things in terms of its spending relative to its income. Now, Wright also is right when he says that part of the reason that's happened, the structural deficit is in place and so great, is because of the large tax cuts that Donald Trump has put in, particularly for the wealthy. Is partially
Hmm.
true, but the formula for a deficit is spending more than you take in, and you take in up and down the tax code. And if you go back to times, even the period under Ronald Reagan, we still were taxing people up and down the economic spectrum at a much higher rate than we are now, not just the wealthy. So it is true we need to tax the rich more, but it is also true we probably need to tax almost everyone who's paying taxes more. And we need to figure out ways to spend less. And if we don't, eventually, probably during times of other market stress, the marketplace is going to let us know that's the case. No one knows when that magic day happens, but we obviously draw closer to it as the size of the federal deficit grows. And now that it's eclipsed 100% of the GDP, it's certainly at a notable size.
Okay, again, let me put you in charge. Where would you cut? You said tax everybody more, so you're going to bring in more revenue, but you still have to cut. Where would you cut? Trump is looking at Social Security and Medicare, which makes me personally very anxious. What would you put in your, what would you aim at to cut costs?
Oh, well, look, I think if you look at it, entitlements, for
A
instance, Social
terrible
Security.
word.
Yeah, I know. But so look, there are some things you can do under entitlements that I think aren't that, well, shouldn't be all that controversial. For instance, let's start with, after a certain part of your income, I'm going to get it wrong, but it's the first $64,000 you stop paying into Social Security.
Hmm.
Um, wealthy earners should just keep paying. Sorry, folks, that's how it goes. That's
Hmm.
one of the ways we need to make this tax system far more progressive. It should also be the case that at some point the retirement horizon needs to back up as life expectancies and productive work lives are extended, because we're paying people out now for far longer than we
Right.
ever were before.
Right.
And I saw one simple solution that said, if you started with a 5-year grace period and then every year thereafter backed up the retirement age
Right.
by 1 month per year, but only for those who are entering the workforce, not for those who already have a promise on their plate,
Right.
you would start to solve this problem or make a big, meaningful dent in this problem. Also, our defense budget, give me a break. If, in,
Ridiculous.
if indeed we have been successful and Europe is going to spend, now you can, at the hard spending that they're going to spend in Europe is at least a couple percentage points of GDP across Europe. And just to use a guide, Europe is roughly, its GDP collectively is roughly the size of ours. So 1%, we should freeze what we were spending and cut 1% out, assuming that out of the 2% they're spending, 1% represents money we don't have to spend to defend
Right.
them
Right.
anymore. So I actually would tip my cap in some ways, not to how he did it, but where Donald Trump has gotten us. But
Hmm.
the corollary to that is you don't get kudos for having done that unless we're seeing a benefit from it. It is not a reason to pay to
Right.
increase the budget by another $500 billion for gosh
Right,
sake.
right. That's a really good point. I'm so inclined to hate Kevin Warsh, to hate the tariffs, to hate all of the policies because they are Trump's, and I so dislike him. That is my bias, and I recognize that. But when you pull it apart, some of the things he's done has actually put us in a better place. And spending less on the military would be a great idea if that's what we actually are doing. He's called for an increase in it. I think the money going to ICE is crazy. I think the tariffs have had a really bad effect on trade that could be undone. But he has done a few things, like requiring Europe to spend money on its own defense that are good.
Yeah, and look, the healthcare system. I mean, if you look,
Oh yeah.
if you made somebody, emperor or king, if you will, you would frankly, what happened with healthcare in the United States under Obamacare is the system really is predicated on nationalized healthcare, but the Democrats couldn't get it there and they couldn't get enough funding. So
Right.
they sort of launched into it, figuring that as the system started to creak loud enough, they could force the body politic into more funding and maybe even a national system. So we have to admit to ourselves that that's where we're going. And if we do, we need to more closely emulate what they do in Europe, which isn't now, the national health system, for instance, in the UK has better years and worse years. But assuming you're running it under a better set of circumstances, there are trade-offs that you make, including the fact that not everybody gets to spend unlimited amounts or that last 10% of comfort to chase, that one marginal, extraordinarily expensive drug. That's one of the main reasons why drug prices here are so much more expensive is we buy that last 10% of comfort, even though the cost curve starts to escalate astronomically. We do it within the government context. If people want to do it privately, obviously it's a whole different issue. They don't do that in Europe, and their healthcare costs reflect the savings that come along with that. The other neat thing, if you go to a policy that both, just to sum all this up, that both Warren Buffett and Elon Musk agree, and now, of course, this is overly simplified because you'd have to have a referee, but the way to do it is that you set a level at which the deficit every year, the budget deficit, can only be so large. And what you do is you set that just underneath the growth rate for the economy, so that eventually we sort of grow out of this debt. And if the deficit exceeds that, then no politician is eligible to run for re-election because the incentive system is too focused on short-term shenanigans so that politicians can give handouts and preserve their legacies, they preserve their positions as opposed to the long-term health of the nation.
Right. No one's looking at the long term. Okay, I'm going to skip around a topic here, a subject change alert. Explain to me what the heck is happening with gold. I've been reading all these articles about investing or not. What is the deal with gold?
That's a great. I got to give you two. I got to give you 2 stars. That is a great question, because gold, which is normally a safe haven when things go bad, is softening in price. And even
tell me what that means. I will never buy gold. Tell me what that means for me.
I'll tell you a little secret, which is if you want really hard, good economic news, don't go to The Economist. Even The Economist got this one wrong. It said, well, gold's run up so much that people no longer see it as a safe haven. That's not what's happening. What's happening is this. There are a number of countries in Asia and some in Europe that have already started, by virtue of the automatic government programs that are in place, subsidizing their consumers to insulate them from the price of oil and inevitably food, which will rise because of the conflict in Iran. Those countries in aggregate have less fiscal room because of the largesse that they doled out, particularly during COVID. They're getting closer to the end of the line in terms of what they can spend. So where are they going to get money from to basically prop up that spending, which also supports their currency? They in the wake of the instability and the unique uses of the dollar as an economic tool that much of the world has taken exception to, central banks around the world have, on a relative basis, decreased, not dramatically, but the margin decreased the dollar they held and increased more assets, including gold specifically. The polls came out and said, we're going to just start selling gold to defend our currency and support the social spending that we're going to need to do. If inflation gets really bad because of this oil crisis, the expectation is that will be a lever that governments around the world pull in order to raise funds when if and as they start to run out of fiscal room. And so gold prices have softened because of that general fear. And it's behaving unusually in this time of crisis and not accelerating in price. In part, it is because it has accelerated so much. People have started to get nervous. And there's no fundamental value for gold. It's like modern art. It's not a promise of future dividends or interest coupons. It's what can you sell it for next time around. And there's this general concern that a lot of governments are going to try and monetize their spending by selling significant portions of their gold reserves. So that's what's going on with gold.
Just fascinating. It's like studying gambling and it's the behavior that it engenders. A similar question: are we in danger of losing the dollar as the international currency? The dollar, is it losing its value
I love that
against?
question. That's a one gold star question. I love that question because a lot of people
I
get
feel like
that
I'm getting
wrong.
graded in journalism school here tonight, Mark. Okay, answer my question.
The look, we the more we use the more we use the dollar and trade as means of forcing others in the world to do what we want, the more they will look to avoid the dollar, and we will lose some of the patina or the sort of excess value of the U.S. currency. So the dominance as the currency that not only do people have to trade in, but the one they like to trade in. We will lose at the margin some of that gleam on the dollar, but we will not lose the fundamental value of the dollar because when we demand something, say from China, we pay for it in dollars. And if they want to sell it to us, they've got to receive dollars and then they have to do something with those
With
dollars.
the
And
dollars.
even
Hmm.
if China says, well, Mark, I know you want to buy this, I don't know what they're still allowed to sell to us, but let's say I want to buy a beautiful TV that's coming over from China. They say, Mark, you can't pay any more in dollars. We need renminbi. Well, guess what though? I only have dollars. So I'm going to anyway go out to the market and sell dollars. So those dollars are going to go out somewhere in the market anyway. So it really doesn't matter what the proximate transaction takes place in. As long as the United States is the big consumer on the block, which we are what, 1/5 of the world's
Hmm.
demand. And there is no currency that is similar in terms of import demands. We will be the preeminent currency. We may not. People may try to avoid us, and as they have been, for instance, since COVID, and particularly under the Trump administration, trying to hold less dollars as a reserve currency. When I talked about the fact that they're trying to hold less dollars and more gold. But the good news is, even if the glint is off it, they're still going to need it when I go out to the marketplace and demand things. And that's not going to change until the size of our demand function changes in this world. So don't worry about that one.
Fascinating. Okay, Mark, my final question is a prediction I want from you. Trump is traveling to China, and a series of talks are going to be held with him and Premier Xi. Do you see any major economic news or development coming out of this visit?
And tell you what, I've read in the financial press that optimistic voices in China are hoping that this will look a lot like Thatcher's trip when when she basically reaffirmed to China that they were going to take back hold of Hong Kong. Of course, we're not talking about Hong Kong this time around. We're talking about Taiwan.
Taiwan.
And the Chinese are apparently asking for what is a subtle but important change. That is that not that we basically changing our view. And I'm going to get the exact wording wrong. It's too bad because it's subtle, but not that we aren't proponents of Taiwanese independence, which we've never said we're a proponent of it, but if we say we actually oppose it, and that we believe there should be reunification for some point, that'll be viewed in Taiwan as a powerful cudgel to get them into negotiations with China. And unfortunately, the one thing that Donald Trump is really good at on the international stage is helping our adversaries perfect their superpowers, whether it be Iran. I've read in the Financial Times, a very credible source, that there are Iranians who say we never knew how easy and powerful our control over the Strait of Hormuz was going to be
Until now.
until we proved the concept.
Yep.
Congratulations, Donald Trump. And the same definitely goes for the short to intermediate term chokehold that China has with respect to rare earth minerals. that
True.
that and that they always had the club in the closet, but they didn't know how easy it was to wield and how powerful it was until Donald Trump helped them prove the concept.
Oh, I
So
love that theory.
the risk is for Donald Trump to get much of anything out of China. He is going to have to wink and nod with respect to the future of Taiwan, and that's terrible.
Oh, I just love that theory. That's so interesting. Enables our enemies to realize their superpowers. It's, that plays to my bias too. Mark,
Well,
I
and he's
love.
done it. Oh, and one more, he's done it
Go ahead.
with the folks in Venezuela.
Yep.
Right. If you look at the whole of the regime, now, of course, Maduro thinks differently, but the rest of them are looking around saying, well, that wasn't so bad. How long can we keep this going for?
Well, he's now
Interrupted you. I'm
talking.
sorry.
No, he's talking about now making Venezuela the 51st state. So maybe that's not an enemy anymore. Um, we have run out of time, but Mark, I love having you on your show, and I promise the next time I'm not going to ask you any economic questions. I'm going to ask you about how the heck you grow those dahlias that you are famous at WAMC for bringing it. They are amazing. Dahlias are so hard. The tubers rot if you dig them out of the ground. They die if you leave them in, and you get an amazing crop every year. So I'm going to have you on a gardening show next. As you know, we end our podcast with a toast, and mine tonight is really simple. A toast to economists who fail to explain how, but still are responsible for, and maybe someday will actually bring us lower prices. Faster than a year or two, please.